Okay, so we'll kick off. Morning, everybody. New month. What I've decided to do this month, because we've done the same kind of foundation class stuff for the past 3 to 4 months, is I want to park that from, any of our newer members, students. We've got recordings in the library, and that material was all really, presenting what was in the online courses, but live, a bit interactive. What I'm going to be doing through February is Tuesday and Thursday, we'll do fishing trips. Today was a bit exceptional because JVC wanted to show his new wacky layout. But I'll be doing a little bit of live trading, just stream of consciousness on Tuesdays and Thursdays. Then twice this month, I'm going to do sort of mini clinics, but more workshopy, brain dump stuff. So I'm going to talk about structural trades and risk management today. And then in 2 weeks' time, I'm going to do make up words, scalping based on what's happening in the structure/microstructure, the volume at price. People think I don't scalp. I do scalp, but I do it in a really measured, controlled way based on what's going on in the volume at price. So we'll go through that in 2 weeks' time on Thursday. On the intervening 2 weeks, so next week and 2 weeks after that, I'll just do office hours. I will do fabulous office hours where I'm happy to, we'll open up the room for an hour, bring anything relating to structure, statistics, volume at price, and we'll go very workshoppy. But I will keep throwing in a couple of clinics each month, but at a sort of medium, even / advanced level, just to keep things fresh and mix things up. But that's the plan starting this month. So what I'm going to do today is talk about risk management on the statistical range trades. And by that, let's think about a few different things. We've got our inside out type of trade. So if that's A and we're currently trading in B periods, how do I execute this? So we're going to be looking at execution. I want to clarify a few potential misunderstandings about this kind of inside out trade. So let's do that, inside out. We'll also talk about outside in. Then I want to talk about ranges in the context of the session. Or even statistical ranges. I'm just making notes so I don't forget, in the context of the whole session. And then we'll talk about ranges and volume at price. Now, I think I've got this written down on Post-it note. Other yellow sticky paper products are available, so I don't get lost, but this is to try and keep me on track. So, first misunderstanding. I have heard it said that when Lee talks about the inside-out range trades, B versus A, initial balance break, what have you, if he's going long, his stop is on the other side. His risk is way down there, and this is a massive amount of risk to take. This is not correct. Yeah? If we are assessing which side of A is going to break, top or the bottom, what I've said is, if I'm thinking it's the top that's going to break and the bottom breaks, well, absolutely I'm wrong. Yeah, I got it wrong. But if I have entered here, I'm not getting flat if the wrong side breaks or the side opposite to what I thought was going to breaks. Yeah, that's just stupid. Yep. So I may well put my catastrophic stop just beyond the other side. If computer fails or what have you, if I've got long here for whatever reason, computer fails, of course I want to be taken out if the other side of that range goes. But that is my absolute catastrophic stop. The way I enter any trade, is, I've made this example many times. Let's think about assassinating somebody. We pick somebody, a JVC, a Jeff, whoever. We have got to have our target, our mark. Yeah. We identify what we want to shoot towards. This. Then we take aim and we pull back the string on our bow or cock the hammer of the gun. What might cause me to do that? A price rejector. Yeah, if I'm in B period and I see a nice price rejector form or massive absorption, 455 by zero on the way down. Yeah, that gets me thinking, might be time to execute. Funny how that word's appropriate in many scenarios. Then what makes me pull the trigger? Let's say it's a price rejector or massive absorption, 455 lots absorbed. What do I want to see go the other way? I probably want to see about net 100 delta going the other way. Yeah. 250 or so of those, 225 might be net short. So I'd like to see about half of those go the other way, about 100. If I start seeing net positive delta about 100, then I'll pull the trigger and I'll go in. So that's my reason for entry. Yeah. Target, cock the hammer of the gun, pull the trigger. 3 stages. But when am I wrong? I'm not wrong when, I shot this person. Yeah. I'm wrong when my reason for pulling back the hammer gets invalidated. We might trade through the price rejector, might even start to head down there and the pattern breaks. Yeah. So what's happening here, and it might even happen before I've pulled the trigger. Let's be mindful of that. Yeah. So when my reason for entry breaks or changes, that's when I get out. That's hitting flat. The risk is here. It's really tight. This is what you learn in prop firms. It's about taking trades with extremely small amounts of risk, 2, 3, 4, 5 ticks, because that's what allows you to trade size. And even you take lots of it off and then leave something to the target. So catastrophic stop, absolutely, when we realize we're trading towards the wrong thing. But you don't allow this to go down there to infinity and be taken out. It's invalidation of your reason for entry is the reason to get out of the trade. So I want that to be clear first of all as a general principle. This is risk management on actually any trade where we're using volume at price to determine how we get in. Is that unclear for anybody as how we manage risk when we're using volume at price? I guarantee as soon as I move on to the next subject, 3 comments are going to start appearing in the chat going, just something. Yeah.
Zoom really needs a real-time. Yeah. People are typing.
Or people come to meetings with webcams on. So, that's an example on inside out, but actually it could relate to anything. It can relate to outside. Oh, understand. Thank you, Jeffrey. Positive feedback and affirmation is good as well. That also relates to outside in. Yeah. For whatever reason, 2-sided day, who cares? Let's do a comfortable example. 2-sided day, blah, 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 blah. This goes on, this goes on. We break that. Week break, 12 ticks. What do I see up here? Oh, it's a fantastic price rejector. It's the best price rejector in the world. Look, it's 0 by 1. It's 100 by 20. It's another number. 300 by 300. It's quite a nice price rejector. I've got a really nice price rejector. I've got smallish excursion. And that's up at 4,500 to the tick. Big fat round number, which is SD3 as well. How good is this? Well, how much delta is offside up here? I need to do the math. That was a really bad example, actually, on the price rejector because it hasn't got positive delta. Let's make that 200. Let's make that 3,000. So that delta would be plus 100. This would be plus 2,700. Yeah. So 2,800 contracts are potentially offside. So 1,400 might be new net longs. I need to see delta 500, 600, 700 on the way down. Bam, I get 500 negative delta. 1 level below. Pull the trigger to get in. Excuse me. Yeah. Where am I wrong? I'm wrong if this breaks. Yeah. Asymmetrical trade. But here's something for you. This might be a bit mind-blowing. Every trade I take using volume at price is asymmetrical. I'm always trading effectively asymmetrically outside in. Even if I'm trading from the middle of the range inside out to something. Why? Because I'm looking for a turnaround to get somewhere. So if this is my A period range, we've gone up here. Yeah. If I think, I really want to get long, why? I don't know, UB up here. I want to trade towards that UB. How do I go about trading towards that UB? I'm looking for the pullback away from that UB, and I'm looking for a sign it's turned around. Have we gone far enough yet? Well, have I gone far enough yet here? No. Okay. How can I get in, though, in order to resolve that? I've got to wait on the way down until I can answer the question, have I gone far enough yet? Yes. Again, another good sign, 455 by 0. Yeah. Puke out of that, plus 100. Do you see how this is an asymmetrical entry from an edge? I'm trading the edge of the pullback from where I'm trying to get to asymmetrically. Everything is an asymmetrical trade. It's always asymmetrical risk. I know where I want to go. Yeah. If I know where I want to go, I've got to get away from where I'm wanting to go, and I've got to be able to answer the question, have I gone far enough yet? No. Okay, I've got to wait. Have I gone far enough yet? No. Have I gone far enough yet? Yes. Okay. Now I look for a reason to enter. That's how you do asymmetrical risk management. So whether we're going from the middle of the range up, or middle of the range to the edge, just beyond the edge of the range that's broken, all the way to the other side or back in, it's always asymmetrical. I might be fading. We might have chop. Going on. Tick, tock, tick, tock, tick, etc. going on here in a range. Now, what I have to do here, and I've actually quickly gone on to point 4 of my agenda. If I'm going to trade something like this, and we're going to zoom into actually this morning and have a look at some of this. This is not glibly wait for the price action to tell me where the boundaries are, because I need 2 touches, in order to determine, can I fade this? Can I fade this? Yeah, this is the problem with price action and slow worm, wiggly liney type charts. You've got to wait for a line to form. Yeah, that doesn't tell us anything. This is the top. Once this has happened, then potentially I might have a chance here. But the beauty of the volume at price, and we'll see this when we zoom inside this morning's chart, is I might see something down here, like a print like 455 by 0. Right here, I know I've got some absorption at this level. How do I know it was there? Session came up, we came down to here. There's some absorption here. That's interesting. I can trade away from that asymmetrically. We may head up here. I might see some more absorption. I might see something like 0 by 267. Okay, that's interesting. I've got some absorption up here. Now I can understand I have got a range potentially bounded by some absorption, by some delta at price. But I know where potential boundaries are and what I can lean on. I can do an asymmetrical entry here, may have got an asymmetrical entry here. Once I get back down here, I don't need to wait for it to touch this and see if it holds or breaks. So anyone trading without looking at volume is going to want to see the air quotes retest. Yeah. They don't even know there's a level there. It's only once it's traded there that they know there's a potential level. This is their retest, and they're late. It's rubbish by this point in time. We know from the volume at price that there's already an opportunity to do a trade away from that. Up here, what do? Do we exit? Do we trade away from it? Depends on our bigger picture view of what's going on. And we'll get a bit forensic on this morning and look at this as an example. But even in these situations, even where we are doing, nice horizontal range, or maybe, we're trading something within some LRC channels, whatever's going on, qualifying the volume at price at each area, especially if it's fresh, and understanding it in the big picture of have I gone far enough yet, it's giving us an idea of what is the prevailing direction that I should be doing something in, and where should I be interested in trading. So let's talk about this a bit conceptually. in terms of any range and how it relates to the session and the pullback of the session. Then we'll take this 1439 chart and we'll zoom into it a bit, and we'll try to illustrate that a bit more. So before I do that and get rid of all these drawings, is there anything here conceptually or in principle that isn't making sense yet and I'll need to dive into? Or is there anything at odds currently with either your interpretation of how I go about trading or how you think I go about trading or what you're doing today? All clear? Good. And everyone else is getting on their housework or whatever else, because
taking a nap.
Yeah, people listen in the background. I know.
Your soothing, dulcet tones.
Yeah, not soothing today. Flipping up.
It is a little ragged around the edges.
Yeah, cool. Okay, so session chart, 1439 minutes, whatever. The only truth of what is happening is Globex opens 5 p.m., wherever it was, here, 1700 Central, volume trades. Yep. Have I gone far enough yet? Yes or no? Answer can be no. Doesn't matter. We come off the ledge. So we've got the session. We've got the pullback. Have I gone far enough yet? Yes or no? Answer can still be no, but we come off it. Pullback of the pullback. Now, within this, which we can rationalize it as that. Yeah. Ooh, waves. Exciting. Wave 7. Here was Globex open. Here's high of the day. Have I gone far enough yet? Not a price rejector, by the way. Okay. We've come down. So there's the pullback off the edge of the session. Have I gone far enough yet? Maybe. 224. What's happened since we've come up here? Well, I'm seeing it with emoji DOM print here. But you can also look at a 30-minute chart or a 5-minute chart, what have you. We'll do that in a minute. Just to understand what's happening within these waves or fractals of the movement. Now, of course, it's not doing this. It's actually doing this. Yeah. But how many of these do you want to trade? You have got to have an idea of the clear picture of what's going on in order to successfully trade within this. So let's draw that out, and then we'll actually look at some numbers and understand that. So what's actually gone on today? Have I gone far enough yet at the top? Well, not yet. Not a price rejector. You see that? The 215 versus the 298. The session has not yet gone high enough. Might turn out it has, but we do not have a clear sign we've gone high enough yet. On the way down, we broke a level a little bit earlier, actually. Have I gone far enough yet? I've got a print 224 by 0. I've got some reasonable absorption down here. However, I do have a session 0 print below me and another session 0 print below me. And I know that it's more likely than unlikely that these will fill in. Does it mean they're going to fill in before we resolve the high? I don't know. We could go down to go up, or we could go up to go down. I have no idea. At the moment, I'm in the middle. But what's happened since we have come back up here? Have I gone high enough yet? Well, it's not really a price rejector. 29 versus 40, 178 versus 178. It might be, but it might not be. So it's a little bit awkward. What can I do at this moment in time? Best thing I can do is sit on my hands. Yeah, the opportunities which I've got are, if this breaks here, I haven't gone high enough yet, maybe look for opportunities to get in long to resolve the not a price rejector. Or if this breaks, have I got opportunities to get in short to resolve the 0 prints? At the moment, I'm in the middle. It's very hard to call, is this low enough for now? Is this high enough for now? So actually, I'd say that is better quality, 224, the absorption, than this weird not a price rejector up here. But I'm in the middle. I don't really want to flip a coin. And if it starts heading back down towards this 224, I really want to see what happens. Like, I might lean on it for an asymmetrical long if I hadn't got long there already. If I had got long there already, I'm doing okay in the middle. I can sit it out, or I can bank some profits and see what occurs. But this is how, just within 3 columns of numbers, I'm able to take a view of what's going on in the session, what is my opportunity. And it doesn't matter if I'm resolving artifacts, and I'll talk about scalping these things in a couple of weeks' time, zero prints, unfinished business, not a price rejector. But the only reasons for my trades are, have I gone far enough yet? Well, session, probably not. I'd like to take out these zero prints and resolve them. But how do I do it from here? It's really hard. I'm in the wrong place because I may well have gone low enough. I probably haven't gone high enough, but I don't want to take a view either way from the middle right now. But we can see this, and we can see this progression through the session on a 30-minute chart or 5-minute chart. But what is crucial is that we keep a view of what is happening on the whole session. Now, do I explain this? No, we'll explain these mini fractals after we've looked at the numbers. So let's take let's go 5-minute chart and look at it. What we'll do, we'll look at what's been happening recently, and then we might go back and look at A period and B period, this kind of thing. Okay, so in the stuff which we've just been looking at now, this is 5-minute chart. Ignore coloured blotches and what have you. This is where all time frames are wrong. Yeah, but we can zoom inside using any shorter time frame just to see what's what. Here is our high. It's not a price rejector. Yeah, through some good fortune, this 5-minute chart happens to have those 3 price levels within 1 bar, but it could have overlapped here, or it could have overlapped way back whenever. Yeah, and that's why in isolation, fast chart bars are no use to you. Yeah, we've got to look at the whole session to understand what's what. There was nothing up here telling us, oh, it's coming down. Yeah, all we know, have I gone far enough yet on the session? No. Okay, but what do we do on the way down? If you start trading off these 5-minute bars and every signal, you are going to be run over a bit. So on this one, on the way down, oh, price rejector. What happened on this bar? This bar closed here, yeah? This next one opened, it went up, ignore that price rejector, it's meaningless. It came down. So we've got our session going up here, so not a price rejector. And we've come down on this first 5-minute bar and we've put in a price rejector here. Would you have bought it? Well, we may well have puked out of it. We can't see it in the delta at price. We'd have to look at pullback or a faster chart, 1 minute, whatever. You could have bought that. Yeah. We opened. This was an up bar. We actually went down. We broke through it before we came up. So you'd have probably been taken out. Risk management on structural trade. Yeah. If we'd actually puked out of it, we probably had, because that's what, 1,500 negative delta. We opened. Maybe that will happen, that 472 positive in one quick go. But I think this went down to go up first. I don't think we actually got out of that price rejector, looking at how this bar was. So I don't even think there's an opportunity to go and get in, to pull the trigger before that's occurred. So we actually went down a bit further, bottom of this bar, and we came up a little bit higher than where we'd been. Have I gone far enough yet? No, it's not a price rejector. We've come up a bit further. I don't particularly want to be trying to trade short here, because overall, I'm thinking this needs to resolve. If I miss it, I miss it. So be it. I'll scalp a tick out of the resolution. We come down, not quite so far. We come down a bit further. There's a price rejector. I'll come to that bar at the end of this. Price rejector here, it's meaningless because we've already traded in this volume. Yeah. We come down a bit further, making newer lows. We come down a bit further. This bar, that's interesting, 455 lots. Yep. So now, and for me, it's only ever going to be a price rejector or massive absorption that interests me. So this bar opened here, came down 2 ticks. Now we start to come up. So I've actually got 455, let's say 500, got 600, got about 600 lots in total, potentially offside. 300 might be the true net short. So I want to see about 150 trade the other way. 255 positive delta after about 80. Here's my entry. It's quite asymmetrical. Why am I interested in a long off this? Because I want to get back here. Yeah. So I've got a reasonable long. Seems to start working immediately. Lucky me. Yeah. We go down a bit. Don't care. We go up. Look at this on the way up. So let's do this cleanly. Session is here, not a price rejector. Pull back down here, some absorption. We come up actually to within, I need to get the crosshairs on so we can just look at this. Tools, chart values, there we go. So there's my not a price rejector, 96.25. I'd want to exit if I wasn't optimizing the queue, at least 1 tick ahead of it, 96. Oh, we traded to within 1 tick of my desired exit at 96, 95 3/4. We've got some reasonable absorption, 245. It's about half of what's there, doesn't mean anything. But what is worth thinking about is that on ES through the whole session, 400, 500 plus is probably enough to stop the session. So on a fractal that's inside that, I'd be thinking half. Anything 250 or so is going to get my attention. On a fractal inside that, so I've got session, I've got pullback, I've got pullback of the pullback. 125 or so gets my attention. Well, that gets my attention. I should absolutely be tightening my stops or even getting out of the position. I was within a tick of my exit, take some money. Yep. Now we come back down. I'm going to just clear these drawings and scroll right, then I'll get to your question, Bauer. So let's look at what was happening. There was our 455. Here's the example where we are ahead of anyone looking at price action because we can already start to understand what there's a range. Here's our event in the supply and demand. Yeah, telling me I've got a potential floor, OR, down here. That's what tells me I've got the base of a range at that moment. Yeah, up here, this is what tells me I've potentially, for now, got a range up here. So if I had been long here, exit, no great reason to short because the session is still interesting to me to get back up here. Maybe I want to see if I can get long here, but I know I've got these 0 prints underneath me as well. So I've got to see what happens when we get down here. Now, we actually broke it. Yeah. So I wouldn't just sit there with a limit order. I want to see what happens once we get there. And once we got there, we traded through it. Okay, interesting. But I don't join short on the break. I want to see, as we're breaking down, is there a reason to be taking this short to the 0 prints, which is going to be, as we pull back out of this on the way down, are there signs of it having gone far enough on the way up to justify an asymmetrical entry short? Yeah. Fine. There's that 455. We broke it down here. We go down, 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 down. Happens to be some more absorption. Yeah. 2 overlapping 5-minute bars. But if we consider that in terms of session has gone up, pull back down, pull back the pull back up. Yeah. But we start heading down. It's not like making a new bar. All that happens is this goes a little lower. Yeah. Giving us 193 plus 31, 194, 224 is the actual print at the bottom. Head fake is what TA people would call it, probably. What's so special about 81? I don't know. Asymmetrical entry back up to the top. Yeah, got to be mindful. Top of the range is here. We're trading within what's happening on the session once again. Now, it looks like right now we're actually heading up. So we can use this view of where am I in the whole session and have I gone far enough yet? Have I gone far enough yet? Have I gone far enough yet? to be trading in either direction. It doesn't matter, even if I've got a long bias, which I do have on the session, it is better for me to be trading in the overall bigger picture of have I gone far enough yet? But even if have I gone far enough yet? No, not a price rejector. On the way down, which is actually doing this, let's say I see something like really clean UB on this leg down here. I can take a view if I've got signs of a really nice turnaround on the way up here. Can I scalp towards that UB? Can I take advantage of that or that one or that one until I get signs of a really good turnaround? So I don't fade that just because it's the ledge. That's a good way to get run over. But on the way down, even if my big picture idea is let's do this, on the way up, if there are artifacts that need resolving, there's a zero print on the session down here to resolve, I can use all these same asymmetrical ideas. Where's my risk management? It's my reason for entry to go the other way until there's signs to go back to my original plan. Okay, Bauer's asking, do I take into consideration that recent absorption of 224 contracts? Should I be looking back at the session, Bauer, or am I going to see it on here? Happened at the lower side of the current range, the biggest negative delta at 83. Sounds like I need to look at the session. Okay, 224 is there. Recent absorption, 224 contracts. Let's just get that back to manageable size. Happened at the lower side of the current range. With the biggest negative delta at 83. There's lots of absorption, but I'm still tempering it against the fact there's aggression up through 80 and there's that zero print to be resolved. So for as long as I'm in the middle, I've got to be a bit wary. If it puked out of that 224, so we've probably got to look at 5 minutes again, or even quicker, to understand what happened out of that. Here we go. So let's look at what happened again. There's the 224 down here. Huge amount of absorption down here, but let's just take the bottom level, 224. Do I start to see some positive delta net puking out of it here? I do. Asymmetrical entry long. For as long as that holds, where am I wrong? I'm wrong if I break through this. Well, then actually, okay, zero print resolve and another one below me as well, which starts to get interesting. But I'm still trying to get back up to that not a price rejector up at the high, and we got some energy out of that. And in fact, it looks like we're getting back up there near the high anyway now, doesn't it? So everything is about, having a reason to trade towards something, even if I'm going the other way. There's a reason to trade towards that zero print, but only if I can clearly see we haven't gone low enough yet. Shemzi, I know you sort of invalidated your question, Shemzi.
I think it is actually an interesting question.
It's just want to reread Bauer's question. I take into consideration recent absorption 224 happened at the lower side of the current range with the biggest negative delta. I'm kind of aware of it, but I'm looking for, there's obviously lots of absorption here once we're above it, but I'm looking for a sign. Has it gone far enough yet? 224 by 0. That's a good sign, but I need to puke out of it. Because there was a point where it was 668 by less as each level was building. It would have been resolved until it wasn't. So I need to see it move away from it, which on the fast price action charts as well, you're going to see, the bar delta was building, but you're going to be 15, 30, 45 seconds away from the event. And if you start to qualify it by reading the volume at price and what's happening right now, or in the current traded volume on the dome, you're going to be much closer, which means more size. Which means smaller profits, less risk. So everything is asymmetrical as an entry, and the risk management is, has my reason for the entry been invalidated? If so, get out, or at least strongly consider getting out, unless there's something else to lean on right there. Now, look where we are at the moment. Where was that big absorption level that we saw, the 200 something, 245? As we've been talking away, 95 three quarters, we're now close to the top of the range. This is the first point the PA people have got to actually draw a line and go, oh, that might be the top. Yeah. Oh, there's a wick there. We rejected it. Yeah. We already knew where the top of the range was. Oh, it was the recent high. You can see that in the candle. You can't see it in the candle. You see it in the volume, that there's a reason why that might be a recent high. So if I had got long out of that 224, bearing in mind we're heading to late morning, lunchtime, maybe I take some profits. Maybe I went long with 2 lots there. I made some money on that first run. Maybe I took one off there. I'll hold the other one. Other one can be moved to break even. I can be relaxed. I think it's going to break up through this, because it's not have I gone high enough here. This is nothing. This is in the middle of the volume. If we have a look again on the whole session view, now my DOM print is wrong. We got up to, was it 94 quarter where it was? I'm not certain. I've lost track of the price level. Brain's not there today. Sorry, let's have a look again. Let's be clear. It was 95.75 and we traded up to 95. $95.75. This is where we traded to on that first push up, and we got 2 ticks below it. Big positive delta. Yeah, in my pullback. So, I can be trading everything based on this. What would we call it? 3-wave? Don't like waves. 3 fractal view of, have I gone far enough? Have I gone far enough? Have I gone far enough? Now, for your own company, it might be great for you to look at this on a 5-minute bar. Yeah, that's okay. I won't admonish you too much, as long as you are clearly looking at that as a way of looking inside the volume that's been going on in the context of the whole session. So all you care about is the aggregate volume at each extreme. Yeah, as we pull back from where we've been. If you can read a 5-minute chart in that way and ignore all the crap that's unfresh volume inside it, great, you've got the tool. Yeah. But don't tell me that a pattern in here or a pattern in here or a pattern in here has got any meaning, because it doesn't. It's all unfresh volume. Yeah. It's only the extremes of each leg, which is what we qualify. Alfredo, with the 0 print on the pullback count, it's you mean this one? I would not look to trade that. Good question. I wouldn't look to trade that as here's a 0 print that needs to be resolved. Yeah. Why not? Because it's not a 0 print. It's not fresh volume. Yep. But I would note that, okay, we had some aggression down. Oh, look at the emoji flow print, found it as well. But it doesn't excite me as I need to put an exit here to resolve this thing, because actually I'm looking to resolve that anyway as another price rejector, aren't I? Yeah. Now, maybe if there was a sweep in the middle, which I'm seeing here, or I might even see it here in the pullback for pullback, I'll pay attention to it. But I'm only going to deal with those little aberrations in the context of which direction am I going? Have I gone far enough yet? But I'm not really going to look to resolve a 0 print in something that is not fresh volume. I may, on the way up, as I'm doing this, and how to explain this, let's try and draw this. Here's my session. We're down here. I'm now, well, what happened is we went down a bit further, and now we're probably, doing this on a way up kind of thing. Maybe I got long there. Maybe I didn't. Yeah. But on the way up now, if I'm really thinking, okay, I know there's a reason to be long here from the absorption. I've got UB here. No reason I can't scalp towards that. or that one, or that one, yeah, and scalp around the core idea, or maybe scale in or swarm in, yeah. So I can do all the things I understand in the volume at price and build up position. Be careful if you're adding at higher prices, yeah. Remember, your average position price is moving up and up and up. And if you start to take orders off, take contracts off on the way up, your average position price is moving closer and closer. This can punish you on intraday trailing drawdown, unfortunately. So you can start to do things. We'll get into scalping in 2 weeks' time, but there's absolutely no reason why you can't scalp for ticks in this sort of idea as well. If my idea is up, and this probably isn't the best view of doing it. Let's go on a 30-minute chart and see what it looks like. I've lost all the drawing tools, sorry. I'm going to say clear, mouse, 30-minute. So I'm loading this up now, just a 30-minute chart. It's also another, you can do this on a 30-minute chart really comfortably, and we'll look at A period and B period and might talk through that as well. But this is making it quite clear. Here's the session. Where's the pullback off the low of the session? It's that. Pullback of the pullback, well, it's the top of this, where my cursor is. So we haven't gone high enough yet. I can even now see the pullback down from that using the pullback bar, which has kind of given me a price rejector. So I think, I should be going higher. Oh, there's a, zero print right now. There's some aggression. Could probably lean on that. Can I grab a tick at least out of that, or a favorable entry? You can start to play around and scalp within everything that's going on, provided you are mindful of which way are we going. Got my tick. Could have taken it off. I just want to see, was that a favorable entry for whatever else was there. But, Alfredo, we can use those little aberrations. I've had 4 or 5 opportunities to at least get the tick there. It won't do it now. It's going to plummet. Done. You can get a tick out of that little aberration. Why am I happy about this? Let's draw it in again. And let's look at the waves that have gone on. Session's gone here. Not high enough. Down here. Low enough? Potentially. Up here. High enough? Not a price rejector. Yeah, this is the fresh edge of going up, but I don't put that much weight on it because I'm looking here on the whole session. But as we've come down off this, low enough, actually, it's not a price rejector. So I'm talking nonsense. Yep, I got lucky. But you were qualifying each wave. Jeffrey's saying, like pulling a bow and arrow slowly and aiming at a target. Yeah. And this is how you can scalp around your core idea. But you've got to have your core idea in place first and understand where you are within this progression. Let's have a look. I think maybe the 5-minute chart is probably the most instructive way of doing this. We'll look at B2A just as an example. Now, I've got high-low for the session as a thick grey line, just so I can understand what's going on. So what I just want to note is that we made session high pre-market at 76.25. In fact, let's talk this through first of all, based on the 30-minute chart. So session has gone up. Yeah, pre-market. A period has come down. Here's the bottom of A period, down here. We're seeing a price rejector. Now, we can't see it because this is an up bar in B period. What probably happened is B period opened, went down, then came up. Now, didn't actually put anything great in. This would have been stops. The 7 is still a sign. Yeah, it's thin volume. Those were stops triggering. We're not always going to get great signs of a turnaround. So has it gone low enough yet? Don't know. B2A, we can't see it here. We might look at 5 minutes. We'll see, was there a sign B2A to the downside? I think you'd have doubted it because the pullback down, have I gone far enough yet? Yeah, I have. There's a price rejector. We're not always going to get the cleaner signs. But to the conversation that's been going on in the pit earlier today about I think Philippe was talking about something. He's not here. Yeah, I'm looking at this, but only overnight. I said, but you've got to look at it in the context of the overnight volume. Today's a bad example. We possibly had gone low enough for the bottom of A. Turns out we didn't. One kind of clue, though, can be, look at this. We open, we trade up to within a tick of the overnight high, which was also stops. So that's a bit of a, attention. Yeah. Games are being played here. Let's have a look at the first 3-4 periods on 5 minute, just to try to interpret this story in the same way. And just because I'm not advocating here, use a 5 minute chart. Lee, you've said all time frames are wrong and now you're using a 5 minute chart. No, I'm using it as a way of seeing what's going on. Yep. So, okay. Session high is here. We open, we come down. Have I gone low enough yet? No. Have I gone low enough yet? No. Nothing. It's in the middle. Have I gone low enough yet? UB. Interesting. Yeah. We left UB here. Could I have scalped some UB? JVC's robot probably did. Yeah, so that was interesting. Trade opportunity. Have I gone low enough yet? Maybe. E period opens, we break it. But look at that. Big absorption. Yeah. At the bottom. Now, we ended up breaking it, but as an asymmetrical entry, so 600, almost 1,000 lots. Yeah. Here, we've got 300 or so going the other way. Asymmetrical entry here. You'd have got something. Yep. If you're trading for the overnight break up here, you would have got something. An entry here should not have turned into a losing trade. Yeah. It might have been break even or something. But come on, if you get in at 56, 57, and we trade up to about 65, 66, tell me you're going to take something off. You're not going to allow it to come back down and go to break even. Maybe you're on a point. Yep. Happen to go down. Okay. Have I gone far enough yet? No. Okay. We can't win all of them. But you see how we can read the whole story. Now, here's initial balance at this point in time. What do we know at the point of the initial balance? The low of the initial balance is weird. What's gone on the session is we've gone up, session. We've come down. Have I gone low enough yet? Really don't know. It's ugly. I've pulled back up here. This is my highest point since pulling back off the low. Has it gone high enough yet? Well, it's giving me a price rejector. Let's just scroll forward and understand what else carried on. So, you can't capture every inside-out trade every day, but you can trade within the idea and still probably get some decent trades. All right. So, have I gone high enough yet? We break the price rejector at the top. What could we be? Well, let's throw this out as a question, actually. On our journey up, so we know the session has done this. Have I gone high enough yet? It's come down. Have I gone low enough yet? Really don't know, but we're moving up. There was a UB there. That was a price rejector. We broke the UB. There's the overnight high. This is the initial balance. Do we think that there could still have been trading opportunities, scalping UB resolutions, leaning on anything on the way down that seemed asymmetrical to try to get long on the way up through this? Yep. Even if there wasn't the best slingshot entry all the way down here. As we were doing this, even just on an arbitrary 5 minute view, let alone if we'd seen it like this and like this and like this, on the way up, we could have had UB, could have come down, we could have been leaning on a delta, we could have got that UB and held it, could have gone up a bit further with a UB. It busts through this price rejector, etc. Yeah, we can start leaning on anything to get a bit out of it or go with a structural conviction, correlation, whatever. You know what? I think I'm going to get through this. If I get a decent entry, or I can get a tick, I might hold out for the points. Nice 2% overnight break. Bingo. Yeah, there you go. So that is, this is in part, well, how do you manage risk? By having asymmetrical entries and taking entries at points that have a reason to be used as entries, and getting out if those ideas are invalidated, and having an idea of where you're going and trading within that plan. So Jeffrey sees that, yep, you could have absolutely had some trade. Bauer, you're talking about the same thing I am. You're 92% overnight break. Yeah, I believe this is going to break. Why? I'm near that side and it breaks 92% of the time. Fine. Let's go with it. I just have to manage my risk. Take good entries. Don't chase it. So that is, I've kind of gone through the 4 points. I've gone a bit deeper than I planned to on the fractals, waves, whatever it is, but I wanted it to be clear on, we have to look a bit more deeply than, just B to A, and let's qualify those extremes in this. We've got to be looking at this in the context of the truth of the session, the pullback, and the pullback. But that's not to say we can't still take these inside out things anywhere within the framework. Or, let's say this was the initial balance. The initial balance broke. If overnight I haven't gone high enough yet and I break the initial balance, I put a price projector in, I've got UB at the overnight high, and the overnight high hasn't broken, I've got no grounds to be thinking about a two-sided day. Yeah? So we've always got to zoom out to the bigger picture context of the session and the truth of volume, and then we can trade whatever we want within that. But it helps keep us on the right side, which is how we can stop being run over. So I'm going to stop talking there for a moment. Is this clear / does this raise any questions, observations? I'm JBC, you had a point when we were chatting earlier about, swarming the little fractals and that kind of thing. So feel free to chip in.
Sure. Yeah. Just before the session, Lee was kind of kicking around the overarching idea for what he wanted to talk about here to see if it made some sense. His head is in a weird place right now. And as we were talking it through, I sort of realized what he was describing. I thought, if I were inclined in this example, we have an overarching reason to go long. We got UB at the high and a great price projector at the low, and some stuff beyond the UB that it's sensible to get to, some single prints, whatever. Like, all signs are saying, okay, we want to go high. Where do we get in? If I were inclined to have a swarming mindset, which I generally don't. I generally want to just kind of go in with what I'm going to go in with. And there's that, because my monkey loves the idea of, just keep adding forever. However, this got me thinking, if I had the idea that, okay, I am allowed, let's say I'm allowed a mini. That's for my account drawdown, whatever. That's what I'm allowed. I'm allowed to trade a mini. Well, that's 10 micros. So if I'm going to go in with potentially up to 10 micros, and maybe I don't get to the full clip of 10, but that's the idea, then I might be okay with, as we're pulling back from the high, the pullback bar is coming lower and coming, and every time that pullback bar shows a price rejector. And not the instant the price rejector forms, of course, but the price rejector, and we come up 2 or 3 ticks. We start to leave the price rejector. It's like, oh, okay, I'm going to put one on here. I'm just going to go ahead and buy one. And I'm not going to worry about, I need to quickly manage risk and get a stop in and, break even plus a tick or whatever. No, I'm just going to, okay, this is a sensible, reasonable spot if I'm going to swarm, because by definition with swarming, you're going to be off sides for a little bit, because part of the whole idea is to allow you to be looser. You don't have to be so pinpoint precise, et cetera, as long as you understand the overarching idea. So I put one on, and then, that one failed and it's still going, but that's okay. I'll put another one on. The next time it does the same thing, and another one on, and another one on. And finally, by the time, like in this drawing that Lee's got, by the time we get to our 4th price rejector that has really huge absorption, maybe I've only got 4 on, but you know what? I'm good with that. I've got 4 on with an average price of somewhere between the second and the third one, maybe, something depending on where the fractals fell, et cetera. Or maybe when I finally see that massive absorption, I say, all right, this time around, I'm putting 3 on right here. And that's really what the swarming is supposed to be all about. Swarming is not just adding one more, adding one more, adding one more. You're not gaining any advantage, any of the numerical, logarithmic, whatever you want to call it, advantage of the idea of swarming, quote unquote. And that's about at the right spot, put in a bunch. Don't do just one. You don't just want to average in, right? That's not the idea. So this could be telling you where does it make sense to really deploy a swarm versus where is a sensible spot to put one on. Yes, and it might be wrong and it might go a little off sides and it might take some heat, but the idea is sound. And I'm adding here at a spot where there is an actual, indisputable, undeniable, concrete volume at price reason to put one on. Even if it proves itself to be wrong in that moment, that was a sensible spot. But then you finally get the one with the huge absorption. You say, all right, now is the time for the actual swarm. I'm going to throw 5, whatever, that kind of thing. And then you've got a definitive spot. And if that breaks, well, then the idea is wrong. And I'll just get out of the way and regroup and rethink. So that's what became clear to me. It was like, this is a way I could see myself maybe using swarming in a way that will keep the monkey from, taking the helm and running us into a wall.
And a lot of this really depends on, how active do you want to be? How many of these little pieces do you want to try and grab?
Very true.
I'm just playing around with this as we're talking, but it means that you can start to scalp around the core position and practice by leaning on lots of different things, which makes it good for drills as well. If I believe, we're going up, what can I lean on right now if I think we're going up? So I'm looking at price trajectory at the bottom of this pullback because we're going up, on the session. I'm watching what happens as I'm coming off the top of the current bar. I can keep scalping around it. There's a price trajectory there. Can I get another loss in? This is a lot of what you do in prop firm just on the dome to scalp ranges and how you really start to earn out of moves, because and we've actually seen a lot of this in the price action over the past few days, not so much today, but I noticed it yesterday. So here's 1 minute chart. Just trying to find. We have had lots of stuff going on over the past week where we move and then we get stuck for 5-10 minutes in a little range, and we move again out of the range. We go into it, we move, we form a range, and by reading the volume at price, you can absolutely either keep taking tick, 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 tick at the edge of the range, or try and get the whole range, provided you're understanding the context of where we're going and what's going on. So that was towards the end of the day. And that's why for me, having a little price action chart, just to, briefly look left and, where have we been going the past few minutes, does no harm. We haven't seen it so much today, not in the tighter ranges. That's doing quite well so far.
Incidentally, Bauer, to your question, it's funny you asked that because I said almost word for word exactly that to Lee when we were talking before the session this morning. That the tricky part with this is it's hard to not start getting arbitrary with, well, 300 contracts matters, but 200 doesn't, but 400 really matters. But at some point your brain just wants to go to these arbitrary numbers. And Lee and I were kicking around some ideas of maybe there's a way to try to get to some statistical validity there, but it's going to be a little bit tricky to get the data and look at it. But
roughly, I'd say about, go over 3-4 months worth of ES full session, have a look at the handful of days where the session ends based on absorption, or, look on a 30-minute chart where we see big absorption. How much typically during day session is enough absorption for us to stop? And it's 400-ish plus at the session ledge on ES. So then, to my mind, if we're inside that, if we're on a wave inside that pullback, it's less, half. Yeah. If it's pullback for pullback, potentially it's half of that again. That's kind of how I rationalize it. That's my rough filtering. So 137, which we had at the low 2 days ago, 3 days ago, overnight at the session ledge, okay, that can pause us. I don't think it's enough for us to stop. 2,000, yeah, that's enough for us to stop. So just have a look over, a month, 2 months worth of data, just to get a sense of how much is enough in order to make us pause. And
just
then,
giving me an interesting. Oh, sorry. Go ahead and finish up.
And just scale that down based on, are we inside that move?
You've given me an interesting bit of food for thought. I don't know if this is something you've ever looked at before or not. And if anybody else wants to look at this, I'm curious to try it now. Sierra chart, of course, we use the pullback bar, and pullback bar is only the pullback off of whatever the current bar is. Okay, fine. It does, I believe, I've never used this feature, but I've seen it there and thought, why the heck would I want that? It does, I believe, have the ability to give you historical pullback bars. Right?
Yes. Yeah.
So you could go back on a 1439, session, Globex, RTH, whatever chart, and look at, okay, on any given day, what is the state of the pullback bar at the end of the day? And get a sense for, and I have no idea what the answer is. I've never looked at this. How often, but what I'm imagining, here's my imaginary scenario. Wouldn't this be cool if this is how it turned out to be? That, in 96% of days, the pullback bar at the end of the session has a price rejector at its inside. Wouldn't that be really interesting if we knew that was the case? Then anytime we're trading at the, towards the end of the day or whatever, if the pullback bar at any given point does not have a price rejector in it, absolutely don't go against the pullback bar.
Yeah,
that seems interesting.
It could be that even 30 minutes is a comfortable way of looking at this.
It could, yeah, absolutely.
Because it's quite easy to get the whole view on your screen, and you can see the extremes.
You just got to turn on that historical pullback bar. Although I think you could use, I see you're saying use each 30-minute as if it were the pullback bar of. Have
I made a new low? What's the bottom three levels like?
I see. So use that as a proxy for the historical pullback bar on the session. I see. Yeah, you can do that too.
So let's not go to FOMC day. Let's go. No, that was FOMC. Let's go back a little bit further. Here. Yeah. So don't know what was where on that day, but we came down here 230. That must have been off the high.
Mm-hmm.
We're now coming back off that. That must have been the low of the pullback bar.
Yeah, a 30-minute chart with the high-low of range plotted on it. For the high-low of session would do it. Yeah, that would give you an easy way to see it.
Enough, and just start to story tell.
Yeah, I like that. That's a neat idea.
Yeah, I think it's a comfortable way of doing it.
Yeah, because I would wonder what that statistic is, because it might be what if it is something stupidly high like that? Then that just tells you, if you ever are trading and you see UB in the pullback bar, don't go the other way. Just don't.
Which way are we going? Have we gone far enough yet?
Yep.
Keep those two questions in mind. Put yourself in a position to answer them, and you have a chance.
Yeah, I like it.
Yeah, cool. So I'm going to wrap it there. We'll continue this idea of sort of execution and some real mechanics behind execution in a couple of weeks' time, based around scalping and scalping within this framework, but also scalping the resolution of things that need to resolve. Zero prints, not a price rejector, UB, this kind of thing. And we'll be taking these same concepts and going a little bit tighter of, how can I keep scalping? Look at this. We've got UB at the high. It's NFP tomorrow, though, so that's a little bit dangerous. But was there a reason to short that other than the fact it's the high? No reason at all. It's UB. Have I come far enough yet on the way down from it? Maybe, maybe not. It's price rejection at the moment. They're trying to hold it. Not yet. Until we see a good turnaround at the low, there's absolutely no reason to get long, but I would not be chasing this long yet on the UB. okay, asymmetrical entry, but lunchtime, NFP, you trade carefully. So next week, I'll do a couple of live trading sessions. I'll be, doing my, I'll be expressing myself in terms of stream of consciousness, train of thought in these sorts of terms. And then we'll also, I think next Tuesday, you're doing Making the Most of TRG, aren't you, JVC?
Yes, indeed. That's a new session that we will be doing just to get everybody up to speed on stuff within TRG that maybe is not fully understood about how the website works and how the library works and how the calendar works and just all that good stuff. Heavily going to be aiming it at free course folks. This is going to be a free to the public session because we want to help the people who are in the free course and maybe don't know the way around, get the lay of the land.
So that'll be Tuesday. Tuesday I'll do live session, and then JVC will do that on Thursday. I'll do another fishing trip, but then we'll do office hours. So I might come with some ideas, don't know, but it's going to be the opportunity for you guys just say, let's go through this, or can we walk through this, or whatever. So that will be next week. So hope that was fun.
Fabulous.
I know Jeff Fielding enjoyed it.
I liked it too. This was useful. Definitely. This clarified some thinking for me. So thanks.
Good. Okay. So I'll start thinking about more of the same, the next month or two. And we'll start to build up a series. I don't know how we put this in the library, JVC, but we'll start to build up
something.
Clinics around specific themes and ideas.
Cool.
Good stuff. Okay. Thanks everyone. Bye for now.